Hey, look up in the sky, it's a bird, it's a plane. No, it's the Einstein and Ives out here out front of the New York Stock Exchange on the day before Thanksgiving. Ladies and gentlemen, my man, Dan Ives, number one tech analyst in the world, breaking it down. We're giving you the Einstein and Ives big breakdown. Thank you for coming. It's a pleasure, my dear friend.
Great to be here going into Thanksgiving, right? I mean, what a year so far it's been.
So much to be grateful for. We have a market that virtually everything has been thrown at it, yet it continues to trade at record highs.
Yeah. I mean, like, look, the reality is that this is still a tech-led bullish market. And despite trying to take down Nvidia, AI bubble fears, remember, as we always talk about, it's easy to call a bubble from the 25th floor of a New York City office building on Metro North or whatever it may be. When we're in Asia, demand to supply 12 to 1.
Right.
If demand to supply for Nvidia chips are 12 to 1, that shows you, and it's only US today, we have a lot longer for this tech bull market to play out.
So let's give everyone a little backdrop on that. So everybody knows AI, everyone knows tech. We know the big players in the game. Jensen, right, godfather of AI. We know Palantir, one of the super rising stars of the game. We also know that a lot of the players in the Mag 7, who are not necessarily in the AI space, have now committed large amounts of capital to it because they do not want this train has left the station. They do not want to come back to their shareholders 5 years down the road and go, you know what? When it's trading 100x, right? When the 12 trillion is in and everybody in the world is living in a whole nother place in 5 years and these data centers are starting to be up and running, that we didn't participate. These people are visionaries, as are you, but they are visionaries, the guys who run these companies.
And they want to make sure that they have the GPU capacity, the data center capacity. So the CapEx, even though they could get hit in the near term relative to earnings and free cash flow, it's the smart move. Because the reality is that you don't want to be on the outside looking in. And that's why what's happening is eventually all these big tech companies will try to build their own chips. They'll try to build their own ecosystem. But still, there's one chip in the world fueling the AI revolution, that's Nvidia. But the multiplier effect across software, across cybersecurity, across infrastructure is just beginning.
So you've got Nvidia as the maker of the grandest of all chips, correct? Now, recently a story is starting to trickle out about Meta and Google and the chip that they have, right? Give me a little background on that, if you can.
So, I mean, Google has their, you know, if you look like, they have their own chips, in terms like TPU, which they do with Broadcom. That's been there for 10 years. Actually, going back to 2013.
And it's curious, now it's only getting traction. So
it's been there.
Right.
But Meta just put it in order for those chips. The difference is that Meta, they can only get about 40% of the chips that they need from Nvidia.
From Nvidia,
So now they're
in the marketplace looking for supply.
Google. Now, Google's one of our favorite names. So this is a positive for them because it just shows the incremental demand. But to make an angle that the Nvidia game's over, it's laughable, right? Because the reality, the only reason anyone's going to Google or going to anyone else
to get look, if you can't get enough ground beef at this butcher, you're going to go to the other butcher. I mean, but why? It's so curious why they do this kind of a twist. Let's go back to the Palantir and the Nvidia story for a moment, right? So we are now coming. We had the government shut down, the government reopened. We had Palantir earnings come out. They were stellar. It was a 7-day buildup into November 3rd when the release came. And the stock sold off 8%. It took the market down a little bit with it, as opposed to realizing that one of the old Wall Street adages is buy the rumor, sell the news. When a stock builds up 7 days in a row, going aggressively higher and higher, trading at a record high when the earnings are released, as opposed to just saying, amazing, great, they did wonderful. People are taking a profit, especially with a lot of the uncertainty around everything else happening in the market. They'd suddenly throw out this story. That, I mean, it's such a non sequitur to suddenly say, when it's all about good news, and it's a majorly easy explanation for it, to say that AI is a bubble, that this is all smoke and mirrors, that none of it is real, and that it really threw a complete wrench in the whole marketplace.
But me and you for years have gone through, from deep seek to white note to Fed to tariffs to it. You have to be, like, look, a week ago, the Fed's chances of cutting in December was 22%.
Correct.
Today it's 87%. I'm just saying, like, the way you make money in this market, you have to understand fundamentally what's happening. Palantir is a perfect example. Like, this is just early days in terms of what's happening. The stock could sell off, and it has.
Right.
But it's my view, like, we're only sort of 10% through their opportunity.
So look, people need to understand that. So the message that Dan and I try to get out, we know that a lot of mainstream media tends to be catastrophists. They like a good headline, right? And headline, you know, if you give people a simple explanation of why things happen, it doesn't get as much of a headline as AI, which literally the guy here selling hot dogs, the guy driving an Uber, and the guy who's got a hedge fund that's worth billions of dollars all have exposure to AI. They know what ChatGPT is, right? When that is happening, it's amazing to think, why would you spin that story? And you're not going to get a headline if you give that explanation.
But the bears are going to continue to try to find ways to say, like, okay, this is done.
To sabotage the story.
You know, like the Burry stuff, like maybe like, you know, OpenAI, too big to fail. This is the moment.
Right.
Look, the reality is, as I've said, like the S&P 7000 hat, you were getting it made. By December 31st, because this is a market. We're going to be talking about S&P 8,000, 9 to 10 over the coming year. I'm not saying that in between you're not going to have sell-offs. You're not going to have nervous points, but we're sitting at a point where the best private companies in the world in AI are still private. Anthropic, XAI, OpenAI.
Okay.
When we get to the point where all these companies have gone public, and you know, as you see execution play out, you could then look at the market and be like, okay, maybe it needs to slow down, but I don't believe it gets there for another few years. It's more of a 1996 moment, rather than 1999 bubble moment.
So look, we're trying to break down, because we have had consumer confidence back in February, March, and April when Dan and I started going on CNN. Consumer confidence when the self-inflicted economic Armageddon happened with the new sheriff in town talking about disseminating information around tariffs and all that kind of stuff. And the market sold off in 11 weeks, down 20.8%. And the world was in turmoil. Markets were in absolute turmoil. Okay, and the consumer confidence went down to a level that was in the 88 range, right before Mr. Trump came into office. It was at 112. It went down to 1, which is actually a net negative number. We've had a lot go on since February, March, and April, right? The market turned around. We made back at Liberation Day, Independence Day, all that kind of stuff. We've had a wild and woolly summer, right? Everything's been thrown at this market. We have 48 record highs across every indices since then. Okay, we started a interest rate cutting cycle, so we're in the midst of all that, and still we've got this scenario that is being laid out that is absolute kind of crazy, right? And so we have not seen the consumer confidence be as low since February, March, April.
But that's why
it is now down there.
And you said, like, we disagree with that, but it's still direction. You're saying the Fed should cut 50. I was saying 25.
Right, that's fine.
Fed needs to cut. When Powell last meeting tried to be like, hey, not so fast, we don't know about December cut. This economy, this labor force, this banking system, the housing market needs cuts.
Right.
Now, is there still inflationary and some worries about tariff? Yeah, but the reality is, like, you're going to need like 75 bips to 100 bips of cuts going into the next sort of year. Also knowing Hassett is going to be the next Fed chair, who's dovish, under Trump, and you know now it's coming. That's why the 10-year is sitting at 4%. Okay. It's not 4.5. It's not 4. The 10-year is telling you it's going lower as cuts are coming, which also you could say is bullish for gold, bullish for crypto.
Now, so look, let's talk about crypto for a minute. But one last thing. So consumer confidence got knocked the heck out of it, down into this level. We just went, so they started this scenario around Palantir, then everyone's fears around Nvidia were the same thing was going to happen. And they did not talk about the nuance of what's going on. We've seen this movie before. Palantir went up 7 days into the earnings, That's why there was profit taking after records, stellar earnings. Nvidia sold off 3 weeks into earnings. That's why when they had stellar earnings, it rallied back. The story that the it's curious why the Fed, whether it was poking the bear or not, why at any point, even though I know we're trading in the dark, we don't have a lot of the economic data necessary to make a decision. The Fed may not as well, okay? But the crazy thing is, how is it possible that they think that there was no, look, Dan said the chance, way back when it was down at 22% probability of a cut, Dan said that the chances of that being real are the same as him playing for Philadelphia Eagles and me playing center for the New York Knicks 25-26 season. That's how crazy
and then
that
at
whole
that
thing.
point, when we said, and then like obviously there was a point, and you're like, you still have confidence here.
Yes.
Because the reality is that the Fed, that mechanism, they realized when like the Cleveland Fed president's like, no cut, no cut.
Right.
Then Williams and others came out, 22% to 87%.
In a week and a half.
No,
In less than a week. Yeah,
in 9 days.
In 9 days. So we're begging you to realize that at the end of the day, we always talk about it, if nothing has fundamentally changed. Because at the end of the day, nothing had. There were stories, they were unpacking a bag, they were preparing their dinner, they were like, the Bears came out, he brought his big gulpy, of Pepsi, he had a big bag of Doritos and all that, and he started to feel his oats a little bit, right? He said, oh my God, look, even Jay Pow said that the chances are slim to none, or there is no longer a surety that we're going to have cuts. Right, and then it all turned around in a week. There are trillions of dollars have been rotated in that week. That's huge. It's not like a nothing burger moment.
No, and you've talked about it. We've talked about how you say like the deleveraging that's happening in crypto,
right.
Worries about the Fed,
right.
Worries about the AI bubble. But I think it just sets up for what's going to be like a market that we come back from Thanksgiving. I think it's a market that rallies into year end, Santa Claus, you get Hassett,
yep.
Another sort of bullish indicator, Fed cut, and then I think that AI trade, the one thing to remember too is like, I think they're going to allow Nvidia chips to be sold back into China. And that's important because Jensen knows this, and he's a conciliary obviously for Trump, is that if you don't let them sell back into China, guess who becomes more powerful? China. And Huawei.
Exactly.
So it's a balance.
It's a balance.
Because for the first time in 30 years, U.S. has had a China intact.
And that's what Dan's been talking about for a while. You have to realize the really global picture of all this. There's a power play going on. There's a lot of economic stuff that's happening. This is a 1,000-piece puzzle. Right? I mean, we talk about it. It's getting to a point where it's really hard. I may even need ChatGPT to understand it soon. Right?
Yeah,
I may have to buy me a couple of chips
there
myself.
There are so many
moving parts. Yeah. There are so many components in this story. But at the end of the day, people need to pause. Take pause. When you see this catastrophism being laid out and the table looks a little bit, you're seeing just a lot of, it's a messy table.
Yeah.
Right? And at the end of the day, you have been saying it. And it's funny because, I listen to everybody else and then I talk to you. And you are the voice of reason, right? And we know.
And
together we complement each other in a good way that way. Look, we were the first ones to own the fact that back in February, March, April, we were not clear whether this was the beginning of a bigger sell-off or what. We know that every sell-off, pullback, consolidation, and crash that we've had going back to 1929 has been a better buying opportunity than anything else. We're trying to impress upon the retail trading community and everybody out there, right, that it's a really positive story, right, and that we are in the midst of.
And it creates opportunities if you're able to find them and navigate.
Correct. And look, it's not. Look, as you always say, there'll be bumps in the road, pebbles in your shoe. It's not a straight upward move, but I have to admit it's been pretty darn close to a straight upward.
But again, haters hate. And you're going to have bears come as the market continues to go out. They're going to try to find cracks.
Right.
And they're going to be like, I've seen this story before.
Right.
But this is the fourth industrial revolution.
Right.
That's unparalleled with autonomous robotics. We're so early days. And it speaks to my view, like obviously, like we sit here thinking, like I'm so thankful, like to have you, obviously our goat Mateo.
Yep.
But the reality is, like, this is not the end of this tech bull market.
No, not at all.
It's actually really just kind of the beginning of this next phase.
And look, that's what things do. We always talk about the trend trade. A trend trade builds foundation when it goes up and pulls back. So these pullbacks are actually key indicators that there's a much higher and a stronger foundation
and $7
going
trillion
forward.
still on the sidelines.
Look, $7 trillion on the sidelines across the board. The Meta, the Google, the Oracles, the Microsoft, all putting hundreds of billions in. Right. We also know that the 5 years out, we're going to have these data centers. Yep. Right. That you know.
How are you going to fuel the data centers in terms of like nuclear? Exactly.
Amazing. So, but think about what happened with crypto over the last couple of weeks. Do you have a feeling about what?
I think that's a deleveraging trade.
Okay, you do. So it's a margin call, net.
I think it's essentially like, look, you talked. It's a margin call, but it's not like, oh, crypto, the trade's done.
Right.
It's a consolidation back to 80 to 85,000. And I think it consolidates back up 125, 150. Right. I mean, that's sort of my view.
So I love that about you because, you know, it's so funny how catastrophists they are. It's like if it's not, they'll suddenly throw it out. They're like, oh, it's over. It's not over. That's not how things work. If you've watched this market, think about how resilient this market has been. Right? Think about how resilient this neighborhood has been. We're in the midst of the financial district. This place has been here. It's seen every possible thing happen to it. Yet it continues to grow, but everyone needs to understand that this is a revolution. As far as look, are we resistant? Is there like a generation that's really resistant about autonomous and all that stuff? Are people scared of it?
Of course, like look,
any change is
even
scary.
Like AI, does that mean like for jobs, like does that make you nervous, like in terms of AI?
Right.
And look, there are parts of it,
right?
But then there are other parts where. In the 90s, internet boom.
Right.
People were like, dude, there's going to be no jobs.
Right.
But it created our biggest asset probably in this country, Silicon Valley.
Yeah.
So it's a perspective.
So explain this one thing to me, because I don't really, for some reason, I don't really remember the internet bubble. So leading up to it, a number of companies like Yahoo and a number of things, the internet started to be it was an idea, right? I mean, I can't even imagine pre-internet, and so what were the mainstream, the companies that came out that were the biggest
Yahoo,
ones?
AOL, you know, all the sort of Aethers and
then what happened with the bubble?
But the reality is with the bubble is that those companies were all built on business models. They didn't have cash.
Right.
It was VC funded.
Okay.
And the use cases were PowerPoints. They weren't real yet.
Right.
Now it's the opposite. This is
we're seeing this live out in real time.
I would argue the fourth industrial revolution that we're seeing today,
right.
The birth of it started
right
in the internet.
Wow. Yeah, that's genius.
And the fiber and everything that was laid out,
right.
Maybe only 10% of that you were able to actually use.
Right.
And then you went to like obviously like a winner,
right.
You went to like lack innovation.
Right. Yeah.
And I'd argue like where we are today, to some extent, you actually think about it like a cycle.
Right.
It's actually the promise of so many things that I heard in the internet.
Right. So those promises, think about it. We could not be where we are today if it wasn't for that. No. On the good side and the bad side. Everything that grows and is explosive and is visionary will always have troublesome times on the way there. Right? It's ups and downs.
And that's the nature. And it's you know, in 2008, the haters,
right.
said Apple was just going to be an AT&T 1 year cycle.
Right.
2013, they said there's no way Tesla and Musk are going to be able to do electric
right.
vehicles. They viewed when Nadella took over Microsoft 2014, the cloud thesis, there's no way that Microsoft's going to turn into a cloud company.
Right.
Nvidia, they're crushing Jensen 21, 22
right.
for investing in AI when they should just be focused on gaming.
Right.
When Microsoft invested $10 billion in OpenAI, Jan 2023,
right.
they said that's ridiculous. That's worth $135 billion today.
Right.
I'm just saying, you know, when you look, it's very easy at times to go through it. But you have to be able to see.
Right. You got to see the what do you call it? You got to see the thing through the
Forest
trees.
through the trees.
You got to see the forest through the trees. Look, ladies and gentlemen, it's a beautiful day. It's Thanksgiving. I want everybody out there to go make some money, trade some markets. Always understand that if nothing fundamentally has changed, then nothing fundamentally has changed.
No.
We're going to be doing this for a long time. We've got another 120 years in us, don't you think?
Look, it just comes down to like, it's such an exciting time.
Yeah.
And all the stuff we're doing is just trying to navigate through the noise.
Yep.
That's very confusing.
And there are always going to be haters. There are always going to be bears. But you know what? I'm not seeing. You see any bears? Anybody see any bears? I don't see any bears.
Look, and the point is, like, haters hate.
Right?
You got to stick to your...
And Einstein and Ives is going to continue to kick ass on a daily basis. This is the best. My man, I love you all. And that's all I got to say about that.